How will conflict with Iran affect your finances? My name is Susannah Streeter. I'm a financial markets expert, and every day I keep investors, clients updated on what's happening in financial markets. So let me give you the lowdown. First of all, energy prices. We're seeing a really big spike in gas prices, but also oil prices as well. What's been happening is that Iran is retaliating, hitting US allies around the Gulf region. Qatar has been hit, particularly its liquid natural gas facilities. They are the biggest exporters of liquid natural gas in the world, accounting for some 15% of the LNG used across Europe. And that's why you're seeing this big spike, 40 to 50% in gas prices. So this will have an effect on costs for companies. The question is, how long will it continue for? How long will this conflict last? At the moment, it's not clear. Oil prices have also risen around 9%. That's the biggest gain in around 4 years. You are still seeing a lid to some extent kept on prices, because what we've seen recently is big producers like Saudi Arabia increasing exports and production. So even though the capacity is there, the problem is those supplies can't get out because there's real disruption across the Strait of Hormuz. The Strait of Hormuz, which is a key passage for oil tankers through the Gulf. Around 20% of global oil and gas supplies use that route. And there have been explosions of tankers, very difficult to pass. Reports that Iranian and Chinese ships can still pass, but big companies like Maersk are avoiding the area. It's in addition to disruption in the Red Sea as well. So this is why you're seeing this rise in oil prices. Again, we don't know how long it's going to continue for. The US administration is saying that it isn't expecting this conflict with Iran to last anywhere near the conflict with Iraq lasted. However, events are still playing out. On equity markets, what you're seeing is pretty steep falls. Not major falls to the scale of what we saw during Liberation Day last April, but nonetheless, they are significant falls, and it's certain sectors in particular that have been affected. So, not surprisingly, airline stocks have borne the brunt of the sell-off. That is because there are so many passengers stranded, routes have been disrupted, aircraft have been kept on the ground. And it's not just that this is complex to resolve, but also it can affect sentiment across the wider travelling public. People may not want to book holidays or go on business trips while war is raging. So that's affected cruise companies as well. Also, banking stocks have been affected. This is because of concerns about knock-on effect on economies. There's concern about rising inflation because rising energy prices can push up the headline rate of inflation. And this can all have a knock-on effect on growth, which is why banking stocks are being affected. Concerns that borrowers may not want to take out loans, and those loans that do exist could go bad. So that's why you're seeing this adverse effect on financial stocks. Gold, on the other hand, and silver, well, they've risen again. They're safe havens for investors, seen as a way to shelter their money against geopolitical shocks and inflationary concerns. And that's why you're seeing another ramp up in prices. But Bitcoin is still weak. The crypto winter is extending. You've seen a bit of a fluctuation in the price of Bitcoin today, but certainly the downward path really does seem to be trending, certainly down from those record levels reached last summer. The Trump bump is well and truly over, and there's a real flight away from riskier assets. That is all from me. I will keep you updated as the week progresses.